Talking about Irma blowing through and taking away your Social Security, not the hurricane, but rather the income-related monthly adjustment amount that 1 out of 10 Americans saw in the letter that they got from Social Security just this past week. Thought you were getting an 8.7% increase. Fantastic. Until you tripped some means testing, i.e. you had the means to pay more, so you're going to pay more thresholds that are imposed by the folks at Social Security. We were talking about that at length in the previous segment as to what the thresholds were and how much that can add. Certainly can add a tremendous amount of money each and every month, because for a married couple, if you trip the threshold, it's not just one person's Medicare Part B and Medicare Part D premiums that are subject to that upward adjustment. It's both of you. So it doubles up the impact, particularly in a married couple. Now, we said that there were ways that you might be able to successfully challenge. One of the ways in which you will be unsuccessful is if you say, well, I sold the property and I'm never going to do that again, or I inherited money and I'm never going to do that again. No, that doesn't work, okay? The IRS doesn't look at that as an option for you to challenge their determination. Here are the options that you could explore to file with them to challenge that. You got married, you got divorced, you became a widow, you stopped working. Now that could be, that one could be the one that might get you if you retired. You lost income from an income-producing property due to a disaster, like a natural disaster kind of thing. You experienced a termination or reorg of an employer pension plan, or you received a settlement from an employer because of an employer's closure or bankruptcy or whatnot. That's it. That's the 7 different options that you would have. You've got to fit one of those boxes. And in order to make that claim, you need to do a form SSA-44, and ultimately that then becomes the way to try and claim that, hey, wait a minute, you hit me with this, but my situation really changed, and please don't increase the cost of my Medicare. So that's ultimately how you do it. When you file the form, you've got to go through a process of providing evidence and proof to make sure that you submit all of that. So anyway, that's the rest of the conversation on IRMA and how those increases on your Medicare Part B, Part D premiums based upon your income in the year 2021 can certainly impact you. It's now my pleasure to welcome into the program Kristin Cayley. How are you?
I'm doing good, Joel. How are you?
I am doing good. You've been pretty busy of late. You haven't had the opportunity to join us. Why is that?
It's been a couple weeks.
Yeah, but really you've been working hard for a couple of months or so on something. What is that you've been working so diligently on?
So a couple weeks ago, I passed the CFP exam. So now just tentatively waiting for my official results.
We got to hit the applause button. There you go.
Thank you.
That is good stuff. So waiting on, so you have to clear the background check.
Exactly. Pretty much.
So hopefully you're able to clear the back. I think you will. So congratulations on that.
Yes, thank you.
Really good stuff. Becoming a certified financial planner is certainly a big achievement. So good stuff.
Thank you.
So on the program, we're going to talk about some of these changes that happened, particularly for this year. And, one of the things that we do, and hopefully our listening audience appreciates the fact that we do a little prep ahead of time for these programs. It's not like we just sit in here and wing it. Although back in the day, I used to, but it wasn't as good of a show, or at least I didn't think it was a good. Anyway, so I was looking through kind of the outline notes, and I was getting more and more fired up on some of this stuff. So tell me about these changes that are happening on 1099K reporting.
So that's one of the big ones for this upcoming tax year, is that the 1099K reporting requirements have changed. So all third-party vendors such as Venmo, Cash App, PayPal, apps like that, they must now report payments of more than $600 for any sort of payment you receive for goods and services. And that's going to come to you in the form of a 1099-K by January 31st. So this is different because it used to be, the old rule was over 200 transactions or $20,000 worth of services or goods.
So that's a pretty significant change.
Mm-hmm.
I mean, you don't have to sell a whole lot to crack $600 in terms of, and they're talking about the gross sales price. So
Correct.
It's not like the net. I mean, it is and then that's going to automatically generate out a 1099-K. Now, if I remember correctly, wasn't this all part of the American Rescue Plan of 2021?
Mm-hmm. So it's kind of been a work in progress. The IRS has been trying to catch people for this for years and years and years. This is just kind of the first step towards implementing some of these strategies.
Right, but wasn't that piece of legislation, didn't that have to deal with COVID and rescuing us from COVID? So,
it did.
but now they're going to be taxing us on all of these types of transactions that previously really weren't kind of getting into that tax bracket. Mm-hmm. Okay. And plus 80,000 new agents.
That as well.
Okay. So what's their thought behind that? I understand some of the thought, and I get it, but what's their thought behind that?
So they're really trying to catch fraud. So people purposely excluding income because it's not on a tax form. So independent contractors, many times they don't get a W-2 or a tax form because they're paid small amounts consistently, different vendors, that sort of thing. So they're trying to catch those types of people that haven't been reporting.
Yeah, I mean, it seems to me that that's going to certainly pick up more and more people, but the whole concept of this tax gap and collecting tax revenue from people who don't pay taxes, that was sold, if you will, as something that was going to be more about, all those upper income rich people, they're all cheating. Mm-hmm. So we're going to go after them and use this as a mechanism. But the reality is that when we stop and think about who's getting paid through these cash apps, it's your babysitter,
mm-hmm. or small businesses.
It's your cleaning lady.
Right.
It's your handyman. And I mean, there's two different impacts on this. So not only are you, the receiver, going to have to put it on your tax return and sort of go through the calculation, but if you are the payer, wouldn't I have to pay self-employment tax if I'm paying a babysitter, or if I'm paying anybody, a cleaning person? I mean, any of those people. Doesn't the obligation also come back to me potentially as well?
Mm-hmm. In certain circumstances, yes, it does.
So I guess both the giver and the receiver of these is going to be pretty dramatic. How much of this do they say is going to? How much money are they going to get from all this?
They're estimating $8.4 billion.
Okay, well, I guess what is that, like an hour's worth of their spending up there?
Mm-hmm.
Okay, break it down. What do I need to do? Because here's where it gets really, really confusing. How do you need to approach this?
So we've kind of identified 3 different scenarios. So let's just kind of go through the first one. So this will apply to most people. You just use these apps to receive money from friends, family, to split a dinner, vacation trips, stuff like that. So in these circumstances, that's a non-taxable transaction.
I hope so. If I go out to dinner with a buddy and he sends me back $20, okay, that's not a taxable transaction.
Right. So in those circumstances, you should not be receiving a 1099-K, but that's not to say you might accidentally receive one.
Okay, accidentally I get a tax document, because how does the app how do they know at Venmo that it was for a reimbursement of a steak dinner?
They don't as of now, but They're working on it.
Okay, we got these 3 different scenarios that are pretty important. We've started on that first one. There's 2 others. We're going to take a break. When we return, we're going to talk more about this complete change to the tax approach, particularly if you do anything with a Cash App. That's going to impact you. Coming up next here on Dollars and Cents with Joel Kristin and Kristin Cayley of Nelson Financial Planning.